5-stock sampler number 1 this week. And this is a debut. That's right, these stocks were picked 1 year ago, so this is their first time ever in Review-a-Palooza. And the name of this theme, Emily, was 5 good stocks. Now, we'll talk about the theme in just a sec, but the day was September 5th, 2018. Emily, can you remember what you were doing a year ago this week?
Well, I don't take as great diligent notes as you may, but I do have a spreadsheet because starting in September last year, I started studying for level 1 of the CFA program. So I was tracking my studying in a spreadsheet, and I can see that on September 5th, I had put in 80 minutes of reading that day.
Wow.
So whether that's good or bad, I don't know. I passed, so I guess it was good enough.
Congratulations. When did you pass? Was that the
recently,
summer?
Yes. So I took the test in June.
Congratulations,
Thank
Emily.
you.
Emily flipping CFA?
Eventually. So level 1, now I'm in the process of studying for level 2.
And is level 2 when it completes, or you go level 3?
Then level 3.
And that's it, right?
And then 4 years of investment-related work experience. And then I can apply for the credentials.
I see. All right. Well, and I'm just looking at my schedule. I was working that morning on our new mobile game app that's coming out this fall, Investor Island from the Motley Fool, which I'm really excited about. It's going to debut in the Canadian App Store in a few weeks, but then it's going to hit the U.S. App Store, I think, next month. And we're excited. Many of you have helped us beta test Investor Island, so I was meeting with the team that morning. But later that afternoon, 5 stocks, good, came out, and the hook here was that they're all companies that start with the letter M. Yep, it's that silly. I just thought, I like all these M stocks. And I think Rick probably came up with this. So we went with good. And so that's what unites this 5-stock sampler.
That was going to be my question. Who was the genius who came up with that name? And Investor Island, for that matter. I mean, great naming skills. I'm not creative enough to have contributed.
Okay, so for each of these, Emily, we're going to look at the highlights, lowlights, and then talk through the stocks. So 5 stocks, I'll give the names right up front. Massimo Corp, Match Group, McCormick and Company, Mercado Libre, and Momo. Now, those are the 5 good stocks. We'll see whether or not they were good. Let's talk first about the best one, and then we're going to talk about the worst one. So the best one picked $328 a share even at market close, September 5th, 2018, Mercado Libre. And today,
no surprise there,
through Monday's close, from $328 up to $571 and a little bit of change. So it's up 74%. By the way, I should mention the stock market is up 3.2% from a year ago. So I love those low bogeys that we're shooting for. Like just 3.2 is the hurdle we're looking for here. So yeah, Mercado Libre up 74%, off to a great start for this sampler.
Yeah, there's really not anything bad to say about this company, at least thus far. I will say that when you did pick it last year, the stock had already appreciated significantly.
I'd forgotten.
So, yeah, I'm sure at the time there were people who had Googled the company, maybe saw the appreciation and thought to themselves, or looked at the PE ratio, for instance, and thought to themselves, this is ridiculously overvalued. But it goes to show that companies that have historically performed well tend to continue to perform well. So for over the past year, Mercado Libre's really just capitalized on the emerging e-commerce scene in Latin America. It's really a huge opportunity. This is impressive given the fact that the economies in a lot of their core countries, especially their currencies, haven't been exactly stable over the life of the business.
Things are pretty unstable in South America right now. Venezuela and Colombia having some spats, and Argentina with its devaluation of its currency, given worries about the election this fall. You're right.
Yeah, and Mercado Libre, meanwhile, has, while they operate in other markets as well, more stable markets like Mexico and Brazil, despite the fact that they've been surrounded by countries that have really been unstable, the company itself has been relatively stable, and not in the sense that it is a stable performer, but in the fact that they've managed to continue to post amazing growth. So whether that their growth merchandise value or their different processing platforms, so Mercado Pago is doing a great job expanding into the Brazilian market, for instance. I mean, all of these things have improved drastically just over the past year. So I would not feel shy, again, buying it today, even though he's talked about it being up, 74%, I think you said, despite that great appreciation. I mean, it's a great company. It performs well, and I have no doubt it will continue to do so.
I hate to overplay this, but winners do win. Mercado Libre first picked in Rule Breakers for members February 18th, 2009 at $14.13 a share. So from 14, our original cost, up to 571. It has been the single best performing stock in Motley Fool Rule Breakers, and it has just continued to be the gift that keeps on giving. Okay, well, from the sublime to the ridiculous, I'm sorry to say that the company arguably with the most ridiculous name here also has the worst performance. Momo, ticker symbol Momo. Emily, it's down 20%. It was at $45 a share a year ago. It's down about 36 right now. Down 20%. What's happening with Momo?
It's unfortunate that the stock has responded the way it has. Momo's core business has been definitely pressured, not largely because of factors that they can control. So they actually had an impressive, astounding 40% in revenue growth over the past year, but it's a notable slowdown to the numbers that they were posting a year ago. The big story is really, though, that the government has had a field day in regulating a lot of their businesses, notably cracking down on in-app purchases associated with their live streaming revenue. So these were the things that were really lucrative for Momo that suddenly fell off a cliff when the government decided that the content that maybe some live streamers were producing was not exactly family friendly. That being said, it does have a dominant positioning in the Chinese market, so it's an interesting company. But the macro environment, Chinese companies plus government regulations has really pressured this company.
And Emily, I think a lot of people probably don't even know what Momo does, and they hear Momo, people talk about momentum stocks, and that's what a lot of traders say. They talk about it. So, in a sentence or two, what is the business of Momo?
Well, Momo's often been called the Tinder of China. The premise of the company was that they had one of the most popular dating platforms, dating apps in China. It actually kind of moved more towards a live streaming based app with dating involved. So it's still, I would suppose, the closest connection it has to here in the U.S. is the Tinder of China, although there are some significant differences in the business model.
All right. So with Momo 23 percentage points behind the market, well, if you net out that 71 with Mercado Libre, we're looking pretty good. I'm happy to say the other three companies, Massimo, Match, and McCormick, are all beating the market. So this is a spectacular start for five good stocks. I'll give the final accounting in a minute, but Match is up 54%. Massimo and McCormick both up about 26%.
Well, I'd be amiss if I didn't talk about the actual company that owns Tinder, the Tinder of the U.S. there, Match Group. Match Group, really, over the past year, it's Tinder. It's really been an amazing growth driver for the company. But that doesn't mean that they haven't been expanding involvement in other areas. So what I found exciting was, they've picked up strategic investments into new apps as well. One notable one, Harmonica, which is dedicated to helping hook up the 1.8 billion Muslims in the world. So there's still lots of ways for Match Group to continue to expand its offerings as opposed from just being Tinder and Match and Plenty of Fish. But the point being there that dating isn't going anywhere, especially online dating. So it's been a great performer. And McCormick has done really well, too, because of their cost-cutting program. So despite the fact that McCormick has never really been a growth company, it still has a great product. And being conscious about how they spend their money and where they spend their money has allowed them to really expand their margins, increase cash flow to investors in the form of increasing dividends. They've actually had 33 consecutive quarters of dividend increases. So it's an impressive company as well.
That's amazing. A lot of people would think, why do we have McCormick? Why did I pick it in Motley Fool Stock Advisor back in 2014? Because it doesn't seem like, as you mentioned, a real grower, and I do love companies that grow, but I also love companies that serve something special that's hard to compete against. And I love the macro trend, talk about tailwinds. I think food is getting more and more interesting. It's getting more and more diverse. There are more choices all of us have. And spices, darn it, that's what brings the spice to food and life, spices. And so for 5 years now, McCormick has paid good dividends. We got it at 61.5 in 2014. So yeah, touching the scales, over 150 today, it's been a winner. Massimo?
Massimo also been a winner. Nothing too exciting there. Really strong demand for their core product, great international expansion, and drastically improving their net income margin. So just a good business overall.
All right. So remember, this is just year one of 3 years of review. So we hope that things will keep going this well for these 5 companies. I'm really happy to say, on average, they're up 32.1%. The market is up 3.2%. So 5 good stocks sure have been 29 percentage points ahead of the market in their first year together.